Your markets news now. Asian investor sentiment continued to be negatively influenced by the ongoing China Evergrande Group's debt woes. The company failed to make an interest payment to offshore bondholders last week. Investors are therefore extremely jittery about this particular investment, while Chinese authorities are investigating the company's wealth management unit. Markets ended the day mixed. The Nikkei share average ended the day down 0.19%. The Hang Seng index rose by 1.2%, while on mainland China, the Shanghai Composite Index ended the day up 0.54%. Over in the United States, Wall Street ended mixed on Monday as investors began the last week of September and the quarter with a pivot to value as tech shares hurt by rising Treasury yields weighed on the Nasdaq Composite Index. The Dow Jones Industrial Average rose by 0.21%, the S&P 500 lost 0.28%, and the Nasdaq Composite dropped by 0.5%. Well, to get into what's moving markets, I'm joined by Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. Thanks very much for joining us, Makwe, as always. So the US doesn't seem to have got its house in order in terms of avoiding a government lockdown or shutdown. Why is this issue important and how is it affecting markets?
Good day to you and to the viewers, because if they don't manage to increase the debt ceiling, then it means they won't be able to pay whatever's supposed to be paid, whatever is due, and also it's going to continue to ruin the economy, and there'll be so many jobs that have to be lost. And also it's more of a sentiment thing, that if you get the world's largest, biggest economy defaulting, what does it say about the likes of Evergrande, which is just make money in China? So that's also the issue there. But later today, we know that we've got testimony coming out of the U.S. Fed chair and also the Treasury thereof, and we think they'll be addressing the issue. Guys, when will they likely to default, and they have to pass this bill and make plans before at least midnight on Thursday, or else it's not okay for the world.
Are market players reading anything into the fact that there have been a number of Fed Reserve governors in certain states who've decided to resign? Maybe people are not on the same page in terms of monetary policy, or not really?
We are concerned about all that, and I think markets have been paying attention since last week, even before we've seen so many resignations. But the issue here is it shows that if you hear the speeches thereof outside the monetary policy meeting, the guys, they differ when the guys need to start tapering. We have been expecting November, something like that. Others even check the Dallas Fed president stating that they are nearing tapering and they should start increasing interest rates sometime next year. So that itself, it shows that people are not too happy the way things are being guided. And even the Fed chair himself still has to be appointed as his term is coming to an end.
So Germany is considered the powerhouse of Europe, and we know that their elections are done and dusted now. The Social Democratic Party winning 26% of the vote, but obviously they need to get into a coalition to actually govern. What does this mean for Germany and Europe, and to what extent has this impacted European markets?
It does impact us negatively because, number one, we don't know who's going to be in power. As we've seen that they've been in limbo. They have to start talking how are they going to govern Germany itself. And now those talks can take weeks, can take months. And even people are starting to think that even the current chancellor will still be in power come the 17th of December. So now, if you get different parties starting to govern, then it means, guys, you have to compromise on some of the policies. People are also starting to be hopeful that the likes of the digital infrastructure will be addressed, the likes of high tax in Japan will be addressed, but it all depends who's going to come into power. So it's one of those things which are hanging on our head.
On to something which feels a bit more directly impactful on us as South Africans. The oil price now going through $80 a barrel. Not great news for us because we're a net oil importing country, but I suppose it's great news for a company like Sasol.
Definitely it is, and we've seen since yesterday going up almost 6%. Later today, midday, it was up also 6%. We need to note that when it comes to Sasol, they've hedged almost 80% of their oil production at anything between $62 and $70. So that 20% is the one which is benefiting from a price which is above $70 a barrel. But Sasol, they're making also good money when it comes to the chemicals business, and we know that oil is an input when it comes to making those chemicals. So if you see the input prices going up, which is the case now that oil prices are going up, then also that tells you that the chemical prices to the end consumer will also go up. And also the issue that we think that this won't be permanent, but for now Sasol is in a better position. And you look at the Brent oil price, almost in an all-time high.
We have less than 2 minutes, Makwe. Just give us your thoughts on PPC. They came out with a report today, and of course their share price has been running high for quite some time.
We've been worried about PPC, about their debt, and that they will likely have to do rights issue. Rights issue, we know that they're dilutive because it means you have to issue more shares. But now they've came into an agreement, a non-binding agreement with their lenders to extend or refinance their debt. That's positive for them. But one condition, which is an easy condition, is that by the end of October, they should have finished their disposal of the PPC line. And we know they've got the necessary approvals, and that deal should be finalized by end of September. And 10 days thereafter, they should be receiving their money. I think the deal is worth 515 million rands or so. So it's almost a done deal for them. And they expect that the cement sales to go up by 15%. And the likes of their informal and rural markets continue to do better than the other markets. And then as it is, the guys that are complaining about the dumping. But what's positive or the nice outlook for them, they're waiting for an answer from the government whether they must make it compulsory for people to use locally produced cement when it comes to government-funded infrastructure projects.
Excellent. Makwe, thank you very much for your time and insights as always. Makwe Masilela, he's the Chief Investment Officer at Makwe Fund Managers. We're going to go